Good morning, good afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar. Traders, this video is being filmed for trading on October 21st, 2009. That would be Wednesday. Of course, we're filming it on Tuesday for Wednesday's trading. Traders, we have a situation once again in the NASDAQ, or I should say in the indices, the U.S. indices. Double top formations in the Dow transports, in the Russell Index. They also have flat tops, and flat tops produce market drops. So I came before you on Sunday night with this very same information when we first got there in some of the indices. And we said, look out, double tops, flat tops, market's going to go down. And what happened? I felt like I was in a pinball machine. I was like, boing, loser, boing, loser. We got stopped out on everything we did. Markets went straight up. Now, traders, that does not shake my confidence in analysis, because so 1 out of 10 or 15 times that we see double tops and flat tops that it actually goes up and through would never shake my analysis because, or my faith in my analysis, because most of the time you see a double top or flat tops, it does produce a market drop. Now, we've been stuck at this double top and these flat tops for days on end, and we're still there with bearish indicators. And Lord knows I'm a bull, but that's an opinion, and I don't use my opinion. I use the technical analysis to trade. So I am here to tell you, do not let analysis that was done right but gone wrong because of earnings reports shake your confidence in your analysis. Traders who are at my site at the Emini Trading Academy, we spent a good hour today going over analysis, the analysis for Sunday night into Monday, and I would think everyone, 100% of you agree, that was pretty sound analysis for a down move to come, and the market went up anyway. Turned around and came back down from Monday night into Tuesday, and then lower on Tuesday. So it looks like now we will be getting that action from the double tops and the flat tops, which is lower. We shall see. And I'm here to say right now, if I get stopped out again, I will still take that very same trade, because the odds are, when you see a double top or flat tops, they are sell indicators, with, especially if they're coupled with bearish looking indicators, and they certainly are. So if you have a bearish formation with bearish indicators and you buy it, you know what? You're gambling. If you are an analyst like we are here at the Emini Trading Academy, when you see enough signals pointing lower, you have to sell the market. That is what trading technically is all about. Not about second guessing it and should I take the trade today because it says down and I'm bullish. That does not matter. If the analysis points lower, you set up a trade for the downside. If your stop gets hit, so be it. A stop is our best friend. You will still be there trading the next day, taking the very same setups as they come by. I wanted to make that clear, because I got a feeling that some traders started to get a little shaky in believing in their analysis after one day where analysis looked clearly for a down move and the market went up anyway. Don't do it, traders. Don't break faith. Believe in your charts. They work really, really, really well. In fact, once again, I'm watching something on television today, and there's this gentleman, Kramer, who talks about analysis for the last 5 years. Don't do technical analysis. It's crazy. It's voodoo. There he is with a chart telling people how to trade technically. Today, hey, have we woken him up, baby, or what? Kramer, check me out, baby. You want an analyst? You look right here. All right, traders, listen, let's get into some charts here. Let me show you why we have no choice but to put a red Omni on the board, go after the double tops, go after the flat tops, and expect a lower trade on Wednesday. Let's go look at some charts. Okay, traders, what we are looking at is the Dow Jones Transportation Average Daily Bar, and no question that we have a double top and now basically a flat top as well, because you have 2 days that are bouncing off that double top, making it a flat top with the double top. Definitely a lower call you'd have to make if you're a technician that follows double tops and flat tops. Not only does the lead of the Dow Jones Transportation Average have the double top and the flat top, but it also has bearish indicators, and we're going to look at those right now. Okay, traders, Dow Jones Transportation Average Daily Bar Directional Movement Indicator. The positive is green, should be going up if it was a bullish day, but it's going down, making it a bearish look. The red should be going down if it was a bullish day, but it's going up, giving us a bearish look. So the DMI, or directional movement indicator, clearly pointing towards lower. So we have indicators pointing lower and the formation pointing lower. And as a technician, you either go short or you don't trade, but you can't go long when you see things like this. Let's look at another indicator. Okay, traders, once again, the Dow Jones Transportation Average Daily Bar with the CCI, or Commodity Channel Index indicator, and once again had gotten up into the overbought area, has come down and is pointing towards the downside. So you have another indicator telling you that this market needs to come off a little bit. And I would imagine without earnings season this week, we'd probably be lower already, but who knows? I'm going off the technicals. The technicals are pointing lower, and I will take a trade towards the downside on Wednesday. So now you've seen one of the leaders being the Dow Jones Transportation Average, or I should say the main leader. Let's go look at another one of the leaders of the U.S. indices here. Okay, traders, you've heard me mention many times that the Mini Russell, I find, is the third leader. If you are going to put leaders in their order, it would be the Dow Jones Transportation Average, then the NASDAQ, and behind that's the Mini Russell. The three of those, I find, lead the S&P and the Dow Jones Industrial Average around. What you have is a double top and clearly a flat top. 1, 2, 3, 4, 5 hits on that line. No penetration. That tells me that flat top is valid, and likelihood is we will move lower. So you see two of the leaders absolutely flat tops, double tops, pointing lower. Flat tops produce market drops, and when you see a double top, you sell a double top. Two of our rules that tell us we have no choice but to be short the Mini Russell. Now the Mini Russell, of course, has indicators as well. Let's look at their technical indicators. Okay, traders, the Mini Russell daily bar chart for December. You are looking at the CCI Commodity Channel Index. Not only is it pointing lower, but now you have the crossover. As you can see, red crossing above, green, the blue crossing below, giving us a bearish look. Just below that, you have the RSI, or Relative Strength Index, and clearly pointing lower, right? Clearly pointing lower in this bizarre little head and shoulders look right there. So I say that is certainly pointing towards the downside, traders. Take a look at your indicators. Look at the Russell. Look at the Dow Jones Transportation Average. Look at the Dow Jones Industrial. You will see what I'm talking about. They are not in bullish mode right now, although certainly I would love to be. I have to trade what I see, and I am compelled to be a seller on Wednesday for that reason. Let's look at a few more charts here. Okay, traders, the next chart you have before you is the soybeans daily bar January 10 contract. It's for Jan next year. It is the most active contract in soybeans. Do not trade Novembers at all. You should not be in November. You get hit with delivery notices. You are in Jan 10 now. And a very familiar little picture here for us. A swing day setup, traders. And you gotta love the swing days because many of those work out quite well. Swing day setup. On the swing day, we expect to go short if the market opens and rallies up somewhere near the day before's highs. We sell it and expect a breakdown. That is how you handle a swing day setup. So we have a nice swing day setup here in the soybeans January contract. And the soybeans have bearish indicators to coincide with that bearish look. Let's take a quick look at those indicators. Okay, traders, you are looking at the RSI, or Relative Strength Index, on the soybeans daily bar chart. Bearish, no doubt. Below that, slow stochastics. They have hit their 80 to 90 mark, crossed each other, and that's percent K and percent D crossed one another and are now pointing lower. Last time they were up here, we had quite a drop. We're up here again. Indicators are bearish with a swing day sell setup formation on the chart. I am voting and counting on the downside in soybeans for Wednesday's trading. Do your homework, traders. Pull your indicators, look at your charts, and always do your own homework before accepting anybody's recommendation or opinion. So, traders, you've seen those charts. A lot of homework for you traders to go do this evening. Go look at your indices, look at the double tops, Look at previous double tops and what followed. Look for flat tops and tell me what happens there. And certainly look at your indicators. Then, of course, you have the swing day in soybeans. And don't forget, traders, a swing day. Let's say you have a market that rallied up and opened and closed, opened, rallied up, closed. The next day it opens, comes all the way down and settles towards its lows. That is your swing day setup. Day 3, you hope it rallies about as high as the previous day's high where you sell it and expect a breakdown. This is how you handle a swing day setup. That is what we have right now in soybeans. Make sure you look at that for yourselves. Look for other swing day setups and see what the end result was. And make sure, as always, you have your stop in, because we know a stop is your best friend. And if we didn't have stops in Sunday night, we would have been trashed, because I think I was stopped out of 2 out of 3 trades before this video ever hit the airwaves on Sunday night. So listen, stops are extremely important. Have them in. Some traders think when the market's getting close to their stop, they pull it. That's called cancel if close. And to be honest with you, down on the trading floor, we would chuckle every time we'd get a phone call. Cancel if close. The reason why you have a stop in is because you've come up with a trading plan. That plan said stop belongs at X price. If the market reaches X price, you get knocked out. You're not supposed to move the stop, because what happens, most times the loss gets much greater than you ever anticipated. And then you're not following your trading plan. And what good is doing all the homework and coming up with a trading plan if you are going to not use it the next day? So do your homework, plan a trade, then trade the plan, and do not pull your stops just because they're getting close. That is suicide, traders. I kid you not. I joke with a lot of the Omniacs at the site. What I tell them is, I'll erect a tombstone for your trading account. You guys that pull the stops, guaranteed you'll be able to place this one day where your account used to stand. Don't be a statistic. Do not cancel stops if they get close. If they get hit, let them get hit so you choke for the day. Beats the crap out of a mule kick in the back of your head when you stayed in the position that you knew you should have been out of, and now you're praying to the Lord above to try to get out of a position. Not a good move. So be a professional trader, have your plan ready, put your stops where they belong, and do not move them. You only adjust them down for risk management as you're profiting. You pull your stops closer so that you're locking in profit. You do not move them because they're being threatened of getting hit. All right, traders. That's about it for this video. Make sure you give us a call anytime day or night, 702-629-4755. As always, do your own homework. Keep your emotions out of trading. And one of the best things you can do to keep your emotions out of trading is to say this to yourselves every morning, every afternoon, every evening. And you know what that is? Stops are in. Emotions are out. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I'm a 27-year seasoned trader on and off the trading floors. This is how I've made my living for many, many years.